Welcome back to Rockstock Channel. It is Thursday, July 3rd, and we are here today with Raju Daswani and Grace Asenov of Fastmarkets to have a debrief recap of the conference in Las Vegas that they just had, the 17th annual, in a similar way that we did that last year. It was a good conference. Rodney and I were both there, and then Rodney spent a couple of days here with me at Bull's Lair in Forest Hills, New York, and we left fairly, optimistic. So I just wanted to, Raju, start with you. What was the big picture, overall sentiment, from the conference? Like, what narratives, about lithium, and other battery materials, should we all be paying attention to?
Look, that's a good way to kick things off, Howard, first of all. And look, thanks for also having us on the show again. Always enjoy meeting you and having this experience on the podcast. And you can't get away from the backdrop that the markets have this very negative price environment at the moment. There's no question we've seen lots of different challenges facing the market. But what was good at the event, which I felt was the general optimism about the long-term future of the market, especially around lithium and other battery materials. And the conversations there were not about doom and gloom. It was very much about what are the growth opportunities and that growth potential continuing with electric vehicles, but the emergence, of course, of even more growth drivers from energy storage, driven by things like AI. We'll talk more about that, I'm sure. Other applications. So overall, definitely underlying long-term positive sentiment. But the short-term concerns, as I said, are very real too. There is oversupply fears, and those sort of fears exist everywhere, especially as we see new supply coming online from Australia, from Africa. We see these brine expansion projects in South America. There's reports that Chinese spodumene stocks at the port side are sitting at close to 500,000 tons. Sorry, 500,000, close to 500,000 tons, and well above what we'd expect to be comfortable levels. That's sparking lots of debate about whether it's going to take 6 months or it's going to take more to clear this inventory. And then you throw into all of that the funding. And there's, of course, funding challenges, which are front and center. We're seeing junior miners, we're seeing midstream converters struggling to get that capital. And investors, of course, also becoming far more risk averse in this environment. And I guess best way to sum it up was by what one delegate told us, and that was lithium is just no longer attractive for investors right now. So I think that's the current sentiment. But again, as I said, that very much is running against the longer term view that the market fundamentals still remain strong. And I think despite these headwinds, there was strong agreement that diversification is going to be the key to resilience, broadening assets, broadening customers, increasing strategic partnerships to ride out volatility. And critically, there was a lot of talk about how the West must, of course, develop its own supply chains suited to our markets, to our regulations, not simply try to replicate China. And there are good examples of that. And I think I'm sure we'll talk about Arkansas and other standout opportunities to secure domestic lithium.
Raju, if I could ask, someone had mentioned that the attendance was roughly the same level as last year, which is impressive. But anecdotally, it looked to me like there were more service providers attending the conference rather than investors and mining companies. Is that true looking at the actual data from your side?
Look, I think, first of all, in terms of actual numbers that you said, the attendance was very similar to last year. But of course, the demographics will shift year on year, depending on the market circumstances. What I've just said, I guess, is that the investment climate isn't there right now. So I don't think you're going to have lines of investors waiting to find those opportunities. So yes, in terms of the split, the shift. We're seeing a lot of innovation happening in this market around things like DLE. And so we saw more attendance from DLE producers and a lot more conversations about the technology and how that's shifting. But I do think what was quite phenomenal was still that despite the market headwinds, it did still show us how deeply engaged these market players were and how they remain engaged in this market. We did, of course, see record sponsorships. I mean, that was expected on the back of some really excellent numbers for this event this year and last year. And I think it's very clear that companies still want to position their brands front and center because people see this as cyclical and people want to be prepared for that upturn. So you'd expect to see that. I think what we did see was a big increase in North American participation in terms of the numbers. And that again has been driven by domestic supply chain momentum. Again, we'll talk, Arkansas is one good example, another standout um, case of how the markets are moving. We also saw a good diversity, I think, of attendees. So we had miners and lithium producers. We saw recyclers, more from the recycling community. Definitely battery manufacturers, tech companies. And what was also interesting was the number of oil and gas companies there who are looking to explore into transitioning into battery materials. So I do think it's a clear sign for me, this event, and looking at that makeup of the audience, was that it's moving away from just being a pure niche commodity into being a strategic resource, which is very much at the heart of energy transition, which is why we saw what's happening. So I think, again, the investor community was lower in numbers. Yes, 100% correct. But again, driven by current market circumstances.
Raju, so on the investor side, I take that as a contrarian indicator, right? Like, the fewer people that are there, it's a bottoming sign. At least that's my optimistic view. The conference has broadened. It's beyond just lithium. It's now lithium and battery raw materials. So there were some graphite companies, some manganese companies that we saw there. And I definitely noticed the increase, in oil and gas. The Chevron announced an acquisition that week, of TerraVolta, properties. And last year, Exxon was a major sponsor. And I think they were again this year. So and we will talk about that dynamic. And I think that's accelerated potentially under the Trump administration, a drill, baby drill, kind of, mentality. But in relation to the Trump, some of my contacts in China had mentioned that actually a lot of people from China were not going to make it this year. And that was largely, trade related. Just is that accurate? I know you saw the increase in the U.S. numbers. I think you had 1,000 attendees last year. You had like 1,100, I think was the number. So only modestly down, but an increase in U.S. But was there a corresponding decrease in, let's say, China?
I think that's hardly unexpected under the current circumstances. So I think people from those regions where last year you saw quite a good attendance, certainly it had come down this year. I think you're seeing things in America like BYD pulling back on its investment plans around North America. So it's a natural extension of what we're seeing with the politics in America right now and this tariff and trade situation.
Yeah. Well, hopefully, my hope from last year when I was on a panel about the U.S. election, about a prospective grand bargain, between China and the U.S. will be borne out. They're still negotiating. And, maybe if there is such a grand bargain, you'll see a huge increase in attendance next year by Chinese who will want to come into America.
President Trump is the master negotiator. So let's see where this all lands. I think there's uncertainty, but I'm pretty sure it will probably end up being good for business. But whose business? I'm not quite sure yet. You'll find out.
Okay. Well, that goes to the next question is like, what's your assessment of how the Trump era actions are shaping the landscape for critical minerals, and what did you hear at the conference about their impact? And by the way, as you answered that, I'm not sure if I introduced you at the beginning, Raju. You're the CEO of Fastmarkets, and Grace. I forget what your title is, and I know you moderated a number of panels there. If you could just remind our viewers, we've got a lot of people from Fastmarkets on Rockstock Channel over the years, but it would be good to remind our viewers of your positions and what you focus on.
Well, I think you got it right for me. And Grace is our formidable base metals and energy editor for North America. So, so that's quite. Yeah, I think got half of that right anyway, and the other half I just filled you in on. In terms of your question, and I'm gonna turn to Grace in a second because I think I know she will have a strong perspective on this because she is uh, exactly that, the North American editor for these markets. Is such an important question because first of all, U.S. policy environment has become such a central issue, of course, to everyone. And I said that was a big talking point as well at the conference. And under Trump, we've seen a number of interventions, whether it's tariffs on Chinese materials, executive orders, framing critical materials as national security priorities. And all of this has absolutely accelerated momentum to build those domestic supply chains, especially in mining, in cell manufacturing. But what stood out from my conversations was the sense that momentum isn't enough without consistency. And many delegates highlighted that a lack of long term, stable, and supportive regulations will be an obstacle. And if you have tax credits, tariffs, or permitting processes that are shifting every few years, it becomes quite difficult for developers or recyclers to plan investment, which is in the quantum of billions of dollars that these supply chains need. And I think it was well um, framed by one of the panelists. I can't remember who it was who said it, but the statement was you can't build a 10-year supply chain with 2-year policies. And there was widespread agreement that the key to China's success has been policy clarity across government, finance, and industry. And they come framed in the Chinese 5-year plans, and those plans are really adhered to, and then are subsequently appendicized with new plans, which keeps that level of continuity and clarity and certainty in those markets. If the US wants to compete, it needs to adopt a similar approach and supporting not just mining, but also investments in midstream capacity, as well as recycling to close the loop. But again, Grace, what would you say? What would you add to that?
Thank you for having us, by the way. It's always nice to be here again. I think the vibe at the conference this year was interesting versus last year. Obviously, last year we were all wondering who the president was going to be, and now we know that it is President Trump. And I thought that the reactions to the administration were pretty mixed. We've seen Trump was pretty anti EV during his campaign. He's also rolled back some of the tax credits under 30D and talked about it in the One Big Beautiful Bill. So we'll see where that ends up for 45X, for example. But a lot of the panelists mentioned that he's trying to level the playing field overall and that that is net positive. Um, Agree with Raju that there were a lot of calls for consistent long-term policy. Patrick Horwath from Exxon on the Arkansas panel in particular mentioned that he would like to see more investment in midstream capacity, which I think a lot of people mention, but he specifically called for more investment in the cathode stage, and they are looking to build out that supply chain in Arkansas. Joe Lowry mentioned that Arkansas is a great example of how the US can do its own thing basically versus China. So it'd be really interesting to see how that plays out. And I believe Raju also mentioned the need that a lot of panelists mentioned the need for partnerships and joint ventures as a way to build resiliency during the current price depression. um, so yeah, and last takeaway on this particular point is that there was some resignation that we have to partner with China potentially, or at least learn a lot about their technology, that there's no way to move forward without, something happening with China. So thanks.
Okay, that's great. There's a lot in there. We will talk about Arkansas. We will talk about Nevada. I moderated a Nevada panel. Rodney moderated the Canada panel. Partnerships are everywhere in this industry. GM and LAC, GM and LG Energy Solutions on battery cells. GM with Nouveau Monde and graphite and a few other and NP materials on magnets. That's just to mention GM, but like broadly, that has been the China model, CATL and BYD investing upstream, vertical integration. I do believe, there's two trains of thought. GM and LG Energy Solutions are really heavily promoting, and I think they did at your conference as well, this LMR battery. And some people are saying that's the future. Others are saying, hey, at the similar time, Ford is partnering with CATL and said that they're going ahead with their LFP, battery plant. I know Tesla also has an LFP battery plant that they're firing up, in the US. So how much you said there's a resignation that we need to partner with China. So there's two trains of thought. We need to kind of like leapfrog, next gen, technology, and others are saying, hey, let's welcome, China to come in, and we'll see how that happens. This was a question here. China's dominance. How dominant is it today? And what did the conference reveal about, our strategies to respond? I just made some comments there. I didn't even look at this, question that I had in front of me. But yeah, what were your thoughts, Grace and Raju, on
Maybe
that?
I'll just start, but I'll just build a little bit on what Grace said about China. Then we can perhaps come back specifically to some of those points you made. But of course, you again would not be surprising to anyone here that China is always a massively discussed topic at events like this. And I think what's important when you look at China, and we're close to China. We have a big team in China. We have over 50 people there. I myself was born in Hong Kong, so I have a close affinity to the region. But I think what China absolutely did was recognized energy storage as very strategic and very early on. And they combined both really strong government support in this area with a very aggressive upstream investment plan. And that allowed them to build what is a vertically integrated battery supply chain, right the way through from mining through cell manufacturing, and definitely securing resources worldwide with their aggressive resource acquisition policy. And speakers continually emphasize that restrictions on Chinese investment or technology participation or partnership in the US and Canada would definitely create barriers for Western supply growth chain. One of our speakers, Iggy Tan, noted while these policy security concerns, they also limit opportunities for joint ventures, for partnerships, for knowledge sharing. They could actually help accelerate Western capabilities. Yet, I think what was important, and despite geopolitical friction at the moment that we're seeing, many speakers agreed that complete independence from China isn't really realistic anytime soon. Instead, success is going to require finding selective and pragmatic ways to partner, and and at the same time, all along, strengthening domestic capabilities. And I love the way one expert put it: no one can think we in the West can do it ourselves without the Asian manufacturing machine. I mean, Grace, would you like to build on that or add to it?
Yeah, I would add that I moderated the AI panel, and I think that that also holds some interesting opportunities in this conversation. So I think a lot of us realize that AI can find more efficiencies in supply chains and lower costs. But one interesting point that came out of that panel is that it can also address a lack of standardization. So we see, different battery chemistries in the West and all over the world, really. And possibly AI could help address that and make that step more efficient because it is so good at dealing with inconsistent information.
Okay, great. You mentioned Iggy Tan, Raju, which just reminded me that Rodney and I, or you had this great, the conference was extremely well put together, and you implemented a lot of things this year, which you did last year, one of which was this live lounge, which was a live podcasting studio that Rodney and I had an opportunity to interview a number of junior mining companies, including Iggy Tan at Lithium Universe, and Alicia Milne at Q2 Metals, and Daniel Abdo at Sigma Lithium, and a few others, as well as YJ Lee, the Uber bull, Uber bull in a China shop, which we'd encourage you all to watch our interview on that, which we launched yesterday, because he increased his already outlier bullish lithium demand forecast from 4.3 million tons in 2030 to 4.6 million tons on the back of commercial trucks and other applications which people aren't considering. And Grace, you mentioned Joe Lowry on an Arkansas panel, but he did a good interview with Sam Pigott at Lithium Argentina, which I separately listened to, and our friend Chris Berry interviewed a few people as well. And you had Georgia Tolley interview a whole host of others like Dale Henderson of PLS, and Ken Brinsden of Patriot Battery, and most importantly, me. Um, so we'd encourage you to watch that video as well. Me on the other side of the mic, at Fastmarkets was a fun thing. So Grace, you or Raju, these other demand drivers. So EV is obviously ESS, versus AI and military demand. Like, what are your thoughts on how these different sectors are evolving, and what challenges or opportunities are they creating?
Yeah, I mean, I think that's a great question because, of course, that all leads to where is the long-term demand story going to come from? And EVs will continue and will, of course, remain a significant driver for the consumption of lithium globally. And we're still seeing, of course, it's a market that is still growing, a market that is still setting sales records each year. Uh, Forecasts still looking strong across the board. But of course, countering that is the level of expectations that people had. And that's where disappointment is creeping in, I guess, because the adoption in Europe, for example, is slower than expected. Similarly, in the US, and that's contributing to oversupply fears and delaying, I guess, also end of life batteries for recycling feedstock. That's another knock on impact of that slowdown. And then you're seeing on the counter side growth in energy storage systems, surging demand from that side, really, really robust. Grids are integrating more renewables, driving more the need for ESS. Um, and of course, that's giving us grid stability as well. But many developers told me they're still holding back those investments until that policy clarity improves. And while I didn't hear as much on AI, some of course sees AI energy demands as a wild card. But again, Grace, I know that's something you're closer to. Do you want to talk to that perhaps?
We spoke to some ESS market participants at the conference, and to echo what Raju just said, they basically said that the spot market there has slowed down because of uncertainty and tariffs. So I think long term, it does remain a bright spot for the industry. And I'd be curious to hear what you both think about that topic too. ESS versus EV demand, and where you see that going in the future, maybe.
Yeah, look, from my side, it was interesting because CATL put forecasts in their listing document and had about, I think it was, I can't remember how it was at 14 or 1500 gigawatt hours for 20,
14, I think it was 14.
which is the same as mine. I might have tweaked that a bit, and YJ is a bit higher. So that is substantially higher than I think where Fastmarkets is and some others. So we'll see how that plays out. But I think by 2035, as China tapers out close to 100% EV penetration, whatever that cap is, and then it's down to Europe, the US, as Raju mentioned, and rest of world, I think that ESS could, excluding commercial vehicles, just on passenger EVs, be competitive in terms of demand, possibly even bigger. So it's hard when you're compounding with big numbers to, any tweak makes a huge difference. And that's the difficulty about supply and demand with lithium is a 5% compound over enough time makes a massive difference. So we all struggle to try to get the exact number. But Grace, I think it is price dependent because of sodium and other competitive technologies. But for now, at around these prices, I think ESS is going to be a major market. I've seen the latest bids with some of the contracts, and I think the price was fully a full system in the 50s. per kilowatt hour, which is extremely impressive coming out of China.
Yeah, I haven't heard that much interest in sodium recently because of how low lithium prices are, so I think at least that's a positive for lithium on that side. And Howard, I also had a question for you about one of your panels when you mentioned strategic stockpiling. And I thought that was a really interesting idea that I haven't heard for lithium before, although the DLA, the Defense Logistics Agency, does stockpile metals. Um, I thought maybe the shelf life of lithium could be an issue with that concept. I don't know if anybody gave you any information on that afterwards.
Um, well, one person did, but I'll say that in a second. But I remember this time 5 years ago, in the midst of COVID, when we were in the last down cycle, Rodney and I had conjured up a scheme to buy up all the available lithium carbonate, technical grade or whatever, at $4,000 or $5,000 a ton. And we actually spoke to some of your colleagues or former colleagues who were trading, lithium at the time. And we tried to convince, some major trading companies who had been like looking at lithium, but not in lithium. And we said this was a way to kind of create a synthetic mine, maybe buy 50,000 tons of lithium carbonate, allocate 50 to $100 million, and you could virtually guarantee the price would be higher, in a year or two. Unfortunately, we didn't get any takers for that. But I did speak to one of those traders, and he said that he had proposed this idea to Jigar Shah, and others, but the administration had timed out, the Biden administration, so they weren't able to execute it. So I have no inside knowledge about this at all. I've heard from time to time people, the Defense Department prospectively talking about stockpiling certain critical minerals that are critically important for military applications. But my idea was bigger than that. It was more like there is a strategic petroleum reserve, okay, which is meant to, this is not to, for military purposes. This is for broader industry and consumer purposes to buy 30 or 60 days in case there was some conflict in the Middle East, right? That was the concept behind the Strategic Petroleum Reserve. Biden utilized it, for the first time to kind of just like lower prices. So I was thinking, could there be a strategic lithium reserve or a strategic nickel reserve or many other types of critical mineral reserves where in a market environment like now, we would buy either spodumene or technical grade carbonate? To your shelf life question, I don't think they could do that with hydroxide, but I think they can do it with, carbonate, either battery grade or technical grade. And if the government were to come in and buy now, it would raise the price of lithium at least to a certain level, right, where it would incentivize, other projects to get financed. And if the price got too high, they could, sell some. So, it rather than right now we have, the government picking select projects like Lithium America Thacker Pass or Ioneer, and embedded within that and on my panel, I largely confirmed, what was pretty much I've written about, and that is, GM had to commit to a long-term price floor, buying from Lithium Americas, well north of the current spot market in order for the U.S. government, Jigar Shah, to be comfortable lending, to a 22-year tenor on that loan. But what I'm saying is if so there's all sorts of ways that we could stimulate um, project development ex-China. Price floors is one way, but I think the strategic lithium reserve, right, would be a means where you wouldn't be picking winners, right? You would just, enable the U.S. government to have not just for its own military needs, but for the broader auto industry, right? So if all of a sudden China says we're going to ban, lithium hydroxide or lithium carbonate, exports in the similar way that they uh, have been implementing and threatening on rare earths, we would have this stockpiled supply not only for military use but for the domestic auto sector or energy storage, for the utility sector, which is critically important for AI. So this is my idea. I'm sure I'm not the only one. I haven't heard anybody there's no rumblings of this, but anyone watching this, if you think it's a good idea and want to talk to me, you can reach out, or if you have any pull in Washington to kind of make this idea a reality, I think it would be a really cool thing. And it would decrease volatility of lithium, both, in when it gets overshoots on the downside, like today, through manipulation from China or whatever, and also when it gets overbought. Um, so yeah, that was my idea. But thanks for noticing, Grace, and giving me an opportunity to say it here. Related to the price volatility, though, a question I'd ask you is, the exchange contracts and financial markets. We interviewed Prez and Will Adams when you guys won. If you use the ICE, Intercontinental Exchange, I think, issued the CME contract. If you could just talk about, there's been high volumes, in the hydroxide contracts that use Fastmarkets prices, and the new one, there was news, I think, on the ICE contracts.
Yeah, absolutely. Happy to take that one. We have seen record high interest in general across the exchanges, in particular CME, with open interest at over 40,000 tons for the hydroxide contract in particular. But interesting too that the SGX contract for hydroxide has been active as well. And yeah, we're really excited about the launch of some contracts on ICE for the battery raw materials suite, and think it really signals that the market is starting to mature a little bit more, and that's via price risk tools.
Yeah, I think I do add there as well. I mean, it's great to see exchanges like ICE, who, for those of you aren't aware, and they're the owners of the New York Stock Exchange, are coming into this market. They're a massive player in the energy space. And again, it just shows this close convergence that's happening. You talked about the likes of Exxon and Chevron being involved, but this convergence of how these markets are seen absolutely hand in hand alongside these energy markets, traditional energy markets. And I think ICE coming in with their connectivity, their screen trading mechanisms is going to help really take this market to another level. And it's great that they've selected us to go with for their initial launch of their contracts.
Great. Um, Rodney, why don't you talk a little bit about the panel you moderated, Canada? Canada hasn't had so much profile. I've just noticed within lithium, there's all sorts of narratives all the time. So DLE in Arkansas has been prominent. Obviously, Nevada, which I could talk about, but I think with Trump beating up on Trudeau and Canada earlier this year, and then the election, Carney has only been, in the seat for a short period of time. Yeah, what did your panel, cover,
Yeah, I
and what
mean,
was the
that's,
thoughts there?
it's an interesting observation. Ken Brinsden, a CEO of Patriot, was on the panel. And as he correctly mentioned, you've got the US looking or talking about Greenland and Ukraine and here and there, whereas there's a perfectly good tier one jurisdiction with all the critical minerals right across the border with clean, cheap electricity uh, and, mining track records. So from a logistics perspective, Canada is a logical choice for for North American needs for not just lithium, but quite a few others. I guess if you look at the share price, and the market, as they say, is never wrong, Canadian shares have been beaten up because, as Howard mentioned, the thematic changes and hard rock and Canada have waned a bit thanks to change in policy, in EV policy and relations between Canada and the US, but that always then presents itself with opportunities. I think there are still very strong factors that are supportive of Canada, but ultimately there is some DLE and brown, but it's mostly hard rock. Um, And there are some projects, Patriot, Q2, Winsome, that are, in my opinion, big enough to be strategic investments for a major firm. They're not small deposits. Patriot's massive. Q2 could square up to be a 200 million ton deposit as well, which would put it right up there, and it's good grade. And Winsome, was on track for 100 and above. So, and then they had some other metals involved there that are also critical. Some of it cesium, even I think some rare earths. So, uh, one would like to think that the price, the implied price of lithium embedded in a lot of the shares is low. But it is likely to need to see a recovery. So lithium and the clean energy transition is a long-term game. Administrations come and go, and policies change. And I do think, to Grace's question earlier, that ultimately solar plus battery is a hugely competitive energy source. And I think people will come around to seeing that one way or the other. And that will mean, the need for lithium. So I think that the Canada panel, is down but not out. And with a recovery, as and when that comes, it's got quite steep financial gearing embedded in a lot of those companies. So we're likely to see a big recovery. If you see spodumene at 1,500 or what have you, then suddenly it's all back on the table. And they've done a lot of work and they've advanced those projects. So and Canada's looking to accelerate timelines on permitting and assisting. So it's been a jurisdiction where they've been far more supportive than others. So it has been a surprise as to how investors have turned.
If I could add three things to that, because also on the panel you mentioned Ken Brinsden at Patriot, but Rio Tinto's Sarah Marisol was on the panel, as was Rob Gray from Resource Capital, and Resource Capital backstopped $45 million, the Sayona Piedmont merger. So I think the takeaways there is that Rio Tinto has been pretty quiet so far on what their plans are for Quebec, but they are a big player in aluminum and titanium and iron ore in the province. Everybody that I spoke to said that they are very committed to Quebec, and Bécancour is, kind of moving ahead. But Rio is going to have a new CEO sometime this year. But I understand that they're going to have some sort of a investor day. I'm not sure if they've announced this or I think there's scope for them to kind of articulate more fulsomely their lithium strategy across all their geographies. And I think we're going to get some clues as to what they plan to do in Quebec before the end of the year. And I'll remind viewers, I said this at the time when Resource Capital invested in Sayona Piedmont. If you recall, the turn in the lithium market really turned when Altura went bankrupt, and RCF stepped in and did a financing with Pilbara as part of that acquisition. I think that was October or November 2020. And as the Sayona Piedmont merger gets finalized in the next couple of weeks, RCF is going to, commit their money at the price that was agreed back then, which I forget exactly what it was, but a substantial premium to now. But investors, that could mark, another sign of a bottom and a turn, in my opinion, once they make that $45 million investment. So that was Canada. Let's talk about Grace, South America trends. What's your take on how projects in the region are progressing, and do you see optimism there despite the recent price volatility?
Yeah, just to add a note too on Sarah Marisol from Rio Tinto, I thought an interesting comment that she made on the Canada panel was about how some companies dropping out of the supply chain there had freed up energy resources on the grid. She said it was competitive for energy in Canada, and that might make Rio Tinto long term have maybe lower costs or better access to energy. So yeah, just thought that was an interesting note. On Brazil and Latin America in general, we did hear some cautious optimism for projects in Chile and Argentina. And Daniel Jimenez from Illy Markets, he specifically talked about Brazil. He said there are significant opportunities for lithium there, and he really pointed to the existing infrastructure in the country. He said it was low cost, that they had a skilled workforce, and just like, roads and cities that were kind of set up for that industry. But yeah, we heard from market participants in South America that they really appreciated the opportunity at the conference to meet with executives outside of the China supply chain. It's really where the West is coming together to talk about how to build this out more.
Great. I had an opportunity to catch up with the lithium ionic people as well as the Sigma people. I think Lithium Ionic sponsored the conference. We've had them on the podcast before, as we have Sigma, although Anna was, I think, in Tokyo. Unfortunately, didn't show up, but her colleagues, the Daniel and Arena, were there. And then in Chile, I'm sorry, in Argentina, I forgot to mention that in our live lounge we did interview Galan Lithium as well as Noah Lithium brines, as did Georgia. And what they both have in common, other than being high grade brines in Argentina, is that they each have received a large investment from a family office investor in Israel. Clean Elements. Galan just got a $20 million investment, and Noah a 10 million at the end of last year. So we've talked about that, and Noah's Lithium's a client of ours, so we've gotten to know this. But a bright spot is Middle East. This Israeli investor, but other money out of the Middle East is still very bullish on the sector. One thing for the future, I would suggest, I didn't see much, Saudi Arabia or Morocco or other lithium supply chain participants, at the conference. Maybe that next year, because that is a growing theme we're paying some additional attention to. Uh, so is there any more? We talked a little bit about Arkansas, Grace, but is there any further color that you wanted to, provide on that? Because there definitely seemed to be a disproportionate representation. Energy X was also a major sponsor of the conference. I wouldn't say they have a project in Arkansas, but they are a DLE technology. Their presence was evident through cocktail parties and other, coffee branding.
Yeah, absolutely. And one more thought on the Latin American point is that we have seen increasing interest from market participants in South America. And so this year, for the first time, we had kind of a Latin America themed day. So totally hear you on the Middle East maybe being another emerging market, and maybe we could look at that, building it into the agenda a little bit more in a future year. And on Arkansas, there's a lot to add on that point. There's a lot of excitement, as I mentioned, about how the region might help the West separate. It sounds like from the Secretary of Commerce, Hugh McDonald, that they are looking for more investment in building out the entire supply chain, hopefully in the state or in the area in the South in general. Um, some of the excitement was definitely on the presence of oil and gas majors. So Raju mentioned that, but yeah, it's really exciting to see some companies that have a lot of subsurface experience, as they would say, enter the region and bring their technology and expertise on that end. So some of the updates that were given was that the royalty structure, which is basically what the companies are willing to pay the local landowners who have brine on their property. Those contracts now with local landowners have been settled at 2.5%. That's for Smackover Lithium, which is the JV between Standard and Equinor, as well as Exxon. And so that covers like basically the major players for now. Chevron we've seen just entered, but that'll take some time for them probably to get to that point, or so I've heard. But now that those royalty structures are set, the projects can move forward. They said they're going to move forward with engineering studies and also, the financial side. So yeah, pretty exciting to see next steps. I think that keeps them on timeframes for production over the next couple of years. They were saying 2028 is what it's sounding like. And yeah, go ahead. Sorry.
No, I think that's great. I think that's exactly right, and I would corroborate all of that. I just want to jump in actually, just more to just follow up on your point, Howard, a moment ago about the Middle East. There was a lot of talk at the event around this, and a lot of the informal conversations kind of suggested while you have got a lot of interest in countries like Saudi, the UAE, and all of whom have signaled strategic investments in battery materials, especially in downstream industries, EV manufacturing is one. The issue is in the region is the lack of large scale and proven lithium resources or advanced stage projects at the moment. And I think most speakers felt that the Middle Eastern efforts are still in early exploration or investment strategy phase. I do think we'll see more attendance and more integration of this region and the people and the trading and investment community from this region at this event in future years. But I think ultimately, until it moves upstream, and I do know if you look at Saudi Arabia's Vision 30 plan, it is about diversifying into critical materials, of course. And all the recent mining licensing reforms indicate that they want to develop this area and attract lithium developers. But until we see those discoveries or partnerships materialize, I think the region won't really have any active projects to drive meaningful contributions to the overall global lithium supply dynamic. That's my perspective on it.
Okay. They have low energy costs there. I mean, solar is crazy cheap now in Saudi. So maybe conversion or cathode making, or cell making, like things that are reliant. Um, they can import spodumene. They can import, technical grade carbonate. And so anyway, it's come up a few times, both Morocco, but that was a free trade agreement country. We'll see. I mean, Trump was recently in Saudi and he gave a very big speech about, welcoming investments and not so much paying attention to, the political dynamics. So it's just something I've noted, and in a sea of negativity, in Australia and North America, there is optimism coming from those regions from an investment point of view.
And there's no question the money's there, right? To do investment. If
Yeah.
they set their mind to it, they will do it. And we're seeing this huge shift in the position of Saudi Arabia on the global stage, and that will continue to happen.
Yeah. Uh, I'll talk briefly about my panel. I moderated a Nevada panel, which had Lithium Americas, John Evans, as well as James Calloway from Ioneer and Ryan Melsert at American Battery, as well as a woman, Melanie, from the Nevada Governor's Office. We will be distributing both Rodney and my moderated panels as Rockstock channel videos once the Fastmarkets releases those. So you'll be able to watch that. But I mean, I guess an overarching kind of comment is that like Nevada, people talk about, a closed loop system, for the country, right? Like within Nevada, you have that, right? There's Tesla batteries, there's Redwood, recycling, cathode, and then you have lithium mining and chemical processing in Silver Peak with Albemarle. But the U.S. government has written the biggest checks, for Nevada sediments in 2.23 billion in Lithium America's instance, and Ioneer once they find their strategic partner, and American Battery Technology. Ryan Melsert has both recycling and a lithium clay project that they're developing as well. So and it's a mining friendly state. It's a gold, state. There are, we talk about regulatory, reforms to speed things up there. And so anyway, that the overarching, thematic there is that obviously Tesla and all the companies are there, that Nevada has it all, right? It's a microcosm, and the conference was in Nevada. So it was a good thing to talk about there. I think we're mostly through the questions that I had here, but I guess just overall reflections, maybe Rodney, if you could share any more, how did the atmosphere at the event compare to, last year or other ones that you've attended? Is there anything about, you know, who or what was in the room stand out to you?
Yeah, I mean, first of all, congrats to you guys for hosting this conference year after year. Considering where we started, I know Howard was like one of the original Klondike pioneers in this, coming years and years ago. I only came in 2019, was my first. Um, I was impressed with the fact that the numbers had remained largely flat, given 12 months of one-way traffic and pricing. And secondly, I stand corrected, Howard. I'll be interested to hear you confirm or deny, but I would say that the mood is at least, or if not more optimistic last year than this year than last year. Which, considering what's transpired, but I think, as I always say to Howard, every month we go by, at least we're a month closer to the turnaround than we were. Um, yeah, I thought that, I guess, Howard, it felt like people are more constructive and looking at how to get things done, and certainly technology, which Raju mentioned. It's looking at ways to improve and where possibly ex-China has some skills and an edge. And the patience, we've seen investment back off, and now we need just the last piece of discipline. But I think people sort of understand more the market they're in. Howard, I guess people weren't sure what was happening. Now kind of everyone's got a fair lie of the land as to what needs to happen to see a turnaround, and they got the comfort of demand, in my opinion, being stronger than I expected a year ago.
I mean, I just want to follow up on what Rodney just said. I mean, first, thank you for the compliments on the event. It was our 17th consecutive year running this event. We were the first business in the space, and it's been great to see this journey, because obviously it's been a very different market, in the sense of nascent market, new application, significant growth over the years, and now we're seeing a little bit of a maturing in the market, and seeing trends follow what we expect across other commodities. For someone who's been in the business 35 years, I've lived through many cycles and many trends. And what you know is, when times are good and prices are high, the euphoria you get carried away in the euphoria, thinking prices will never come down. And of course, they do. And we've seen that. And then you can go the other direction and believe, just it's a reign of pessimism, which is also unwarranted. These are cyclical markets. What I love about these markets is that the demand structurally is sound. There is no turning back in terms of this direction for these markets. It is a supply issue, and supply will always address itself, because what you're seeing now, with the lack of investment over the last couple of years, will ultimately drive the supply equilibrium while demand continues to increase. So I've got no concerns. People say, are you still as equally invested? We've invested heavily in this space, and we continue to invest heavily in battery materials. We're not pulling back investment. We're not pulling back people, as other businesses may be doing, but we absolutely are doubling down on this area, because we believe in the long-term fundamentals of it. So I think that was reflected. I think last year was earlier in the cycle, so people were more pessimistic. And you're completely right. We're 1 month closer every month to the turning point, and that is why people generally said, look, the demand picture is strong. And yes, there's some short-term turmoil, perhaps extenuated a little bit by what we're seeing with the trade negotiations taking place, but that's going to change. And I believe so. Thank you. Sorry, I went on a bit long probably there. Great.
That's okay.
To add on to what Raju said, he mentioned cycles. And I think one of the key takeaways for me from a lot of the one-on-one conversations that I had is people debating, are we at a floor versus when is the market actually going to recover? And I think those are two different things. We thought we were at the floor a year ago, and maybe, it's fallen a little bit more. Maybe we're still down here. Prices are currently close to 4-year lows. I think it's accepted that we are below cost curve in some cases now. So a big question that I was asked was how much inventory, how big is the surplus in the market? On the inventory side, our research team has said that there is around 680,000 tons of LCE, which is about 7 months of consumption. Um, so that'll take, another bit of time to get through. But on the upside, we have seen one production cut. I don't know if you already saw Sinomine Resources in China announce that they are suspending production. That just happened in the last few days. So could we be at a turning point? Fingers crossed. And to touch on one point, just to close out that you mentioned at the beginning, have we seen new attendance at our conference. And I just wanted to mention that I thought we saw more renewable developers, grid operators, and also large technology firms that, we hadn't seen as much of in previous years. So yeah, thanks. I'm a big listener of this podcast and really appreciate that you had us on. So thanks so much.
Grace, thank you. If I could just touch on some of or all your points, Rodney. Yes, I think it was definitely more optimistic this year than last year. And I recalled when I first started as a broker in 1998, it was the Asia financial crisis. And I remember we had a macro strategist and I would take him around and he would say, we are in the eye of the storm and there are other shoes that could potentially drop. Last year felt like the eye of the storm. It now feels like it may not be completely over, but a lot of the shoes that we didn't foresee, further dropped. But I've spoken to a number of people at Lithium Argentina who's partnered with Ganfeng. They were recently in China and everything. And I've had other people who visited China who all corroborate that on the demand side, everything is very strong, very positive, and an overall, takeaway is like you mentioned a supply cut, Grace, but we've all been waiting. The story about lithium in the past year or so has been, more cuts are necessary. More cuts are necessary because so much supply has been coming on. Um, but it's kind of like my narrative leaving that was just kind of like the U.S. Debt and the reconciliation bill that's passing. Like nobody wants to cut, right? But they're betting that we're going to grow our way out of it, right? So the U.S. government is like betting on faster growth. YJ Lee and other, Uber bulls, growth will take care of the unsustainably low prices. And we have been reluctant to call a bottom, but in my last lithium bull, I did, kind of mention that a number of stocks have, are well below replacement value. And while we were at the conference, the GFEX futures and other indicators, were going up. It's now July 3rd, which means, June 30th is the end of the Australian fiscal year. So you might have had some additional tax loss selling going into that. A lot of the stocks were up a lot in Australia, but also Albemarle and Sigma and Lithium Argentina, this week have rallied. The backdrop overall for equity investing in lithium and critical minerals is good. MP materials and rare earths are doing well. Nuclear related uranium is doing well. So I've always said once lithium price starts rising, and to your point, Raju, nothing's ever as good or bad as it seems. The cyclical markets, we've had a long period of pessimism, and every time we've kind of come out the other side, more optimistic. And from RK Equity's perspective, every single time Rodney and I started this and is working together, in 2019, started this podcast in January 2019. He and I visited in Santiago, the Fastmarkets conference that year. But it took until, the middle, toward the end of 2020. And we're now in month 31. You had a chart, Paul Lusty used a similar chart to the one that I had, that we're in month 31. Prior cycles were like, the last one was 34-month bear. So we're if we haven't already bottomed, and are starting to rally now, I think it's coming. And all the people who are lamenting having coming in and lost money, we get comments on our YouTube. I've lost so much. Lithium's dead. I've lost, so much money in lithium. With a 1 to 3 year view, certainly with a 3 year view, buying some stocks here, we think are going to do very well. So continue to watch Rockstock channel. Continue to track every day fast markets price that comes into your email box. I get it. I don't know. I don't know how our viewers can get that, or what are the best ways that our viewers could interact with fast markets on a day-to-day basis.
On our website, lots of opportunities there to register and get the information. Reach out to us, connect with us on LinkedIn, to us directly. We'll connect you with the right people. Thank you.
Sounds good. Thank you, Raju and Grace, and look forward to doing this again next year.
Amazing.
Thank you.
Thank you. It's great to do it.